understand how to make the cash flow statement under the direct method, we're going to move into the other particular method that could be performed in terms of your cash flow, which is called the indirect method. So first thing I want you guys to realize is that the absolute only difference in the form of the cash flow statement, the direct method and the indirect method, comes in your operating activities. So what I'm trying to say is that the operating activities will differ in structure and form from the direct method versus the indirect method. However, your investing activities and your financing activities that follow are exactly the same. So how you created the investing and financing activities for the direct method is going to be the exact same how you created for the indirect. So the only thing that we're going to focus on in this particular section is the operating activity of the indirect method. Okay? And so what you need to understand is that the reason they call it the indirect method is because they indirectly reconcile net income to show your operating activities. And so what I mean is that if we think about net income is simply our revenues, right? Want another ink here. Our revenues minus expenses, right? This is pretty much how we get our net income. And we understand that we always practice the accrual basis of accounting, which tells us that our revenues are always recorded when earned. So with that being said, the revenues that we report in our net income, naturally speaking, some of them are cash related, right? Meaning that we debit cash and we credit revenue. Some of them are non-cash related, which means that we provided a service and no cash was involved, right? So that's like providing a service on an account. We debit accounts receivable, right? And we credit revenue, okay? Likewise, our expenses are the same, right? Our expenses are recorded whenever they happen, regardless if we pay cash or not, right? And so these expenses that are reducing our net income on our financial statement are cash-related expenses, meaning that we've paid cash for those expenses when we happen, right? Debit expense, credit cash. And some of these expenses reflect what? Non-cash related activities, right? Where we received the bill and we didn't pay for it. So we debit expense and credit account payable, right? Same thing. We've been doing this since financial. So because we're taking net income and we're basically starting that off with the indirect statement, we need to remove what? Those non-cash components from both our revenues and our expenses, so that this net income only reflects revenues and expenses that had some kind of effect on cash. That's what we're ultimately doing with the indirect method. Okay? And so I'm going to share with you guys a surefire way, almost a shortcut way to understand how to reconcile for this indirect method for your operating activities, right? And we already know that our operating activities consist of income statement items, which applies to what we just talked about, and current asset and current liabilities, okay? So we're going to focus on the current asset part and the current liability part. And I'm going to give you a shortcut way to understand how to correctly reconcile, okay? We're going to step away from the traditional accounting approach or the actual concepts behind why it's being reconciled that way, and I'm going to share with you a shortcut, okay? Think about assets in general and put yourself in the shoes of this situation. Normally speaking, when your assets increase, when you have more assets than you had before, what normally happens to your cash? Your cash normally what? Goes down. Why? Because you're using cash to acquire those assets, right? So that's how we're going to reconcile from net income. If our current assets increase, we're going to decrease our net income. Vice versa, normally speaking, when your assets go down, what normally happens to your cash? Your cash goes up, right? Because more than likely you have what? Sold those assets. And so that's how we're going to reconcile from net income. When our assets go down, we're going to add back to net income. Real easy, right? Almost a common sense approach to it. Now let's look at the liabilities. When your liabilities go up, think of terms of borrowing money, obviously. That's a liability when you owe someone, when you borrow some money. So when you borrow some money, your liabilities go up, but what happens to your cash? Your cash goes up as well, right? Clearly. And so when our liabilities increase, we're going to add back to net income. And likewise, when your liabilities go down, the only way that you can reduce a liability is by what? Paying cash, right? So obviously when your liabilities decrease, your cash goes down. And so when our liabilities decrease for reconciling, we're going to what? Decrease our net income. Now that's the surefire way to get the answer correct for all your financial reporting. Okay? And so with that, let's look at a particular problem. So this problem tells us that, let's see. This problem tells us that we're using the indirect method, obviously, for our operating activities, and net income for the period is $624,000. Net income is $624,000, and it says that depreciation is $87,000. So our depreciation is $87,000. Then it tells us the following information describes the changes in current assets and liabilities other than cash. And so we have a decrease in accounts receivable. Decrease in accounts receivable of $22,000. We also have an increase in inventories. Increase in inventories of $9,200. We also have an increase in prepaid expenses. Increase in prepaid expenses. Increase in prepaid expenses of $8,500. We also have an increase in salaries payable of $10,000. And we have a decrease in income taxes payable. Income taxes payable of $14,000. And what they want us to do is create the operating activity section. The operating activity section of the cash flow statement. So of course we would start off with our cash flow, right? The company name, and it's a period, so for the month, I don't know, ended, right? So we're going to start with our operating activities. And we're going to start with the very first part of our operating activities that we always start with, net income. Net income was given to be $624,000. And so basically this net income number consists of accrued revenues and accrued expenses. We need to take those out. We need to only let this net income reflect cash revenues, cash expenses, right? Related expenses. So the very first thing that you always do when you start this off is start off with net income. The next thing you always do is you subtract amortization or depreciation, right? So we have depreciation of $87,000. You always subtract depreciation. Why? Because depreciation is a non-cash related activity. How do we know? Because we debit depreciation expense and we credit accumulated depreciation. I said subtract, I meant add back. So just please make a note of that. Depreciation expense is debited and accumulated depreciation is credited, right? No cash related activity. However, depreciation expense takes away net income, right? Even though it's not cash related. But in reality, we want this net income number to reflect solely cash related. But we already know that this depreciation has been reduced to get us that $624,000. It's already been taken out. But since depreciation didn't have any cash related activities to it, we debited depreciation expense and credit accumulated depreciation, it needs to be added back. It needs to be added back into this number. Again, because it has no cash effect. So anytime you have a depreciation or an amortization, you always add back. Earlier I said subtract, I meant add back. Always add it back. Okay? So you add back depreciation. Then next we just go and use all these things based on the rule that I gave you. The current assets and current liabilities, and we reconcile. So accounts receivable is a current asset, obviously. And the asset went down. And the rule of thumb is when our assets go down, we're going to reconcile by doing what? Adding back. So we're going to add that decrease in accounts receivable. We're going to add it for $22,000. Then we go on to the next one. Which is inventory. And inventory is a current asset, right? And we know that our inventory is increasing. The assets are increasing. So when the assets increase, we have to reconcile by doing what? Subtracting. And so we have this increase in inventory. And so we're going to subtract it. And so next we're going to go to our prepaid expenses. Again, prepaid expenses are current assets. And so since our current assets are increasing, the way that we're going to reconcile that is that we're going to, again, decrease it. So we have an increase in prepaid expenses that are supposed to be decreased. And so next we move on into our payables. And so we already know the rule of thumb is directly inversely related to how we handle our assets. So we see that our payables are increasing. And so now that our payables, which is a liability, a current liability, is increasing, we're going to add that back to our net income. And last but not least, we have an income tax payable. Again, another current liability. Okay, and so that current liability is decreasing. And so how are we going to reconcile that from net income? We're going to take away. So we have a decrease in income tax payable. And so we're going to reduce it by $14,000. And so now that we have taken care of everything, we're going to sum all this information up. So we have 624,000 plus 87,000 plus 22,000 minus 9,200 minus 8,500 plus 10,000 minus 14,000. And obviously that's going to be 711,300. And this is going to be our cash inflow from operating activity. And guys, remember as I said earlier, in terms of the financial reporting between the direct and the indirect method, the only difference comes in your operating activities. How you report your investing activities and how you report your financing activities are exactly the same. So just go back and watch the other videos for the direct method, and whenever it's time that you have to apply the indirect method, just stick to your rules.